Welcome back, ladies and gentlemen, on this wonderful Wednesday for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And yesterday we covered some pretty huge news in regards to the regulatory landscape in relation to the United States and the cryptocurrency space. And this was in the form of the SEC dismissing their notion for a judge to classify the altcoins that they listed in the Binance lawsuit. There were 63 of them as securities. So this is a huge step in the right direction. It's interesting that the SEC is very much backing off on lots of things. You know, the Paxos case, dismissing the Binance case. They will dismiss the Coinbase case, in my opinion, because the US Marshal Service and even Biden's party are using Coinbase. It's very interesting how they're doing that at a time when we've got an election coming up. But this is the great game of politics and bureaucracy. We're not going to spend too much time on that. Do go and watch yesterday's video. What we're going to be looking at is we're going to be kicking the video off, talking about what we mentioned yesterday in regards to we've just reached $35 trillion in debt. This is why Bitcoin was created, because we have a failing debt system. The ultimate result is that we're never going to be able to pay off the debt, and that's going to lead into a new system, a global reset, that is going to be global in nature, because we're all in the same boat at this point in terms of the deficits are global. They're all denominated, obviously, in debt. It's never going to be paid off. This is why Bitcoin was created, to kind of provide an alternative, a lifeboat, if you will. But is Bitcoin the sheepdog that herds the sheep into the pen? And then they ultimately have everyone used to this kind of global system. And then they can ultimately do something with Bitcoin that maybe, gives a little bit of fear in regards to Bitcoin and push everybody into it. It's forecasting. We're not going to spend too long on that. We're just going to be mentioning it. We're really going to be talking macroeconomically in this one. So we looked very internally in regards to the cryptocurrency space yesterday. And this week's been a massive week. We've had 20% of company earnings from the S&P coming out. Lots of them being very positive. We're seeing some great pre-market moves. But today we have FOMC. And we are technical analysts at this channel. And we're very special in regards to the positioning of this channel in the crypto space. We understand the cryptocurrency market very well. We ultimately have derived a bullish outlook on the cryptocurrency space from technically what we're seeing for Bitcoin. We've got that $151,000 target for things like Total 2. We're getting a $3.8 trillion target for this, for things like others, for the ETPs, and we can go on and on and on. We've also looked at the stock market, we've looked at gold, we're bullish on that, and then we've divided Bitcoin and the Total 2 by them, which is in an uptrend. So Bitcoin's going to be the best performing asset class in relation to risk, when risk generally looks pretty spectacular. Okay, so we've derived a bullish outlook on the crypto space based on our technical assessment of it and looking at it in relation to other markets, where they're heading and what crypto is likely to do against them. It's likely to outperform them. We also have a macro reasoning that is derived essentially around interest rates and the strength of the Dixie in regards to supporting what we're seeing technically with risk. Okay, so the correlation here, we're not going to put all the risk like the S&P and everything on, but the correlation is here is the dollar down. This is on the proliferation that came on the back end of March 2020. And risk up. The dollar started to gain strength on fears of inflation, and risk down. The dollar topped, risk pretty much bottomed at the same point. And we are following this correlation, have every reason to believe that the Dixie is on the path to the lower band of a channel that you've been in since 2008, when we officially entered some form of communism in regards to governments and banks. A central bank is very pivotal to the manifestos that those ideologies derive from, but we're not going to go too far down that rabbit hole. And obviously, we know that the dollar's strength is largely going to center around interest rates. And why is it that the dollar is going to lose strength even though other currencies are, and just to show you the interest rate correlation here, even though we know other countries are lowering their interest rates, why is it that the dollar is going to lose strength even though other countries are doing the same thing? Well, it's because the dollar has a larger market. In the same reason, even though other countries are upping their interest rate, the dollar was doing it, or the Fed was doing it to the same degree. Because they have a larger market, the demand for that dollar is bigger than the others, and vice versa. The demand gets whittled away when they start to cut. So you can see, as interest rates come down, typically so does the dollar. And on top of that, let's just cover this to start the video off. We do believe the dollar is in a downward trajectory based on this broad channel that we've been in, and also the breaking of this support line. It's not just when you look at the Dixie, and remember, risk is going to do well in an environment when the dollar comes down, which matches technically what we're seeing, which we think is fundamentally similar with where rates are going, which is why today is important. We're also seeing technical reason on the big time frames and also on the sort of more immediate for the dollar to continue to come down. The dollar is very correlated also with oil, obviously being the driver of interest rates, the biggest driver you could say, and oil looking a little bit flimsy also. So this could be what many would look at accumulation, but I think this is ultimately going to lead to further downside. And that's going to be one factor that drives the dollar. Certainly technically we're looking at it. We're looking at downside for dollar. We're looking at upside for dollar against, or upside for things like the Great British Pound. The higher targets for this is broken out. And the euro, which makes up the majority of the Dixie cross. So just to sort of give you that 360 picture here, because it's important, because crypto is a part of this kind of broader ecosystem of markets. The dollar, the Dixie, in this case being strong, has been negative for risk, and being weak has been a very good environment for risk to do well. Remember, we already think risk is going to do well based on technically what we're looking at, whether that be crypto, whether that be Tesla we're calling for a doubling in, whether that be Amazon, which we called for a doubling in, and it's now well and truly on its way. It's not 100% up yet. It's getting there. I think it's something like 40-50% up since we called that. Lots of stocks look in the same position. IWM, so we've got this technical reason. Our macro reasoning for being bullish on risk on top of technically what we're seeing, which supports technically why we're seeing what we're seeing, is that we're going to see a weak Dixie. This is going to come on the back end of, we think the inflation fight has been won. They're going to lower interest rates because they need to, talking about the $3.5 trillion worth of debt, which is only going to grow exponentially if they do not decide to lower interest rates. It's unsustainable to have interest rates where they are because of the fragile nature of the debt system. Also, they need to lower interest rates so that they can alleviate the bond market so that people get out of debt. I struggle to find other channels out there that can articulate this level of understanding when it comes to the markets like we can here on the channel. So our macro reasoning, it has a hell of a lot to do with the Dixie. We've looked at a number of sort of technical reasons why we think the dollar's going to come down, or the Dixie's going to come down, certainly in relation to other currencies. Today, we actually had news that the Japanese central bank, the BOJ, actually has decided to hike interest rates. Now, this is pretty unheard of. We were looking, so there's a kind of bid that's been put on the JPY USD. This is not the one, sorry. Let's look at the Japanese dollar. Japanese yen. So the dollar's coming down against the yen. So it doesn't look good for the dollar, and we're going into today FOMC, where they're going to probably keep rates where they are, which is kind of what meeting is this? July's meeting today, very expected. But likely cut them and start to cut, which is going to see the fundamental reason why the Dixie comes down. We're technically already being signaled that. That's going to see risk do very well. So today is very, very important. We've also got ADPs and other things like that. And we just wanted to kind of explain that, which we might have done a really bad job of in regards to why, from a kind of macroeconomic or a big view perspective, we're bearish on the Dixie, but bullish. That means we're bullish on risk. And that aligns technically with what we're seeing. We're not just bullish on the risk asset classes that we've spoken about, like the S&P, obviously crypto, gold. We're also bullish on housing. So we've been looking a lot at UK housing. I did a video on it in regards to why it's going to go up. It makes sense that it will when they lower interest rates. Also, if you speak to mortgage brokers, if you speak to sort of estate agents, they're very much saying, they're very busy, certainly in Scotland where I am. We're also bullish on bonds as well, which means we're bearish on yields. And to sort of round things up and talk, again, we've shown you the correlation between if interest rates come down, that's likely going to see the Dixie come down, which is likely going to be good for risk. One thing that leads, we're probably losing a lot of people here, guys, quite high level stuff. One thing that leads, or the thing that leads the Fed funds rate is the 2-year government yields. And this is starting to collapse. You've got your bullish, bearish divergences on both of these. This is going to lead interest rates. So interest rates are going to start to come down. And that's going to see the dollar come down. And that's going to see, this is why we're actually bullish on the likes of the, and have been for a long time. Look at all this volume you're getting here. That's why I'm bullish on the likes of bonds, and this is going to be a great sign that liquidity is coming and see risk do well generally. So we've probably confused a lot more people than we've actually tried to help here. Just know that the macroeconomic environment, we've shown you technically why we think this is going to be a very supportive one for risk. Crypto, when you divide it by other asset classes, is going to be another asset class look bullish, is going to be the best performer. And this aligns with everything that we've been looking at technically for the cryptocurrency space. And we're not a financial advisor. We don't offer financial advice. If you choose to take it at that, that's on your own head. It's not something we offer. But we want everyone to understand that there is going to be a major opportunity in regards to the markets. We are going to have a crash at some point, but we think the market's going to do well up until that point. When that point occurs, when the bull market ends, my best guess is probably towards the back end of 2025. Aligns with global liquidity cycles, aligns with 4-year cycles, there's aligns with a lot of things, PMI cycles. And hopefully by then, we've all done exceptionally well and can be laughing our way to the bank and driving around in Lamborghinis. Who knows whether that will happen or not. But technically, we're putting our best foot forward and saying this is macroeconomically a technical reason why we're bullish, because we're bearish on the Dixie, and everything kind of centers around that. If you can get the dollar trade right, you kind of get it, you're gonna certainly increase the probabilities of getting the back end of those things right. And there's every reason to expect the Dixie coming down, not just fundamentally in regards to where rates are set to go, looking at 2-year yields, also in regards to the Dixie crosses. So the currencies that make up the Dixie versus the dollar. Euro looking good, Great British Pound looking good, Yen actually coming surprisingly strong off that fundamental news. And then of course, when you look at what we're looking at with risk, or when you look at what the Dixie means coming down for risk, it sees it do well. And then when you look at what we're looking at technically for risk, you've got this beautiful overall picture in regards to the markets and what they're going to do. And it's all technically explainable and plausible. That is it from me, ladies and gentlemen. I hope you enjoyed this video as much as I enjoyed presenting it. I do apologize if I've confused anybody. But sometimes with these daily market updates, we like to take a step back. We like to say, okay, let's explain this on a higher level. And let's give people the technical reasons why we think what we think. If you disagree with me, the onus is on you to provide a reasoning to why. And I don't understand isn't a reason to disagree with me. There has to be a reason why you're bearish on the markets. If your reason trumps our reason, we flip bearish. It's that simple. For now, putting our best foot forward. We've been very bullish on lots of things. We've got lots of things right. The one thing I'll say is altcoins have taken a lot longer than we'd have expected to get to where we wanted them to. However, you can't say we've been wrong on altcoins since we got back into the market on January 2023. That was the perfect bottom for Bitcoin, perfect bottom for Total 2, perfect bottom for Total 3. A lot of altcoins have just gone sideways and it's still being accumulated. A breakout will come just like we saw with the IWM. So that's it from me, ladies and gents. On that note, I'm going to love and leave you. There's way more reasons we could have gone into, but we've kept it very technical in regards to the dollar and how pivotal it is and why we think what we think. On that note, I'm going to love and leave you. Thanks a lot for watching, guys. See you all in the next.